my name is Heather Ryan. I own Tax Queen, a tax firm that supports digital nomads, RVers, full-timers, it doesn't matter, nomadic business owners, nomadic individuals in general. And Tax Tuesday is a time for you all to ask your questions and get real answers. So if you haven't already, feel free to jump in here and leave a comment with your question. I have a few to get through today, but not a ton. And I do try to get to things that are live if I have time, which I should have today. So if you see me looking the other direction, I do have the questions that were sent to me prior to this morning on my other screen. So don't think that I'm ignoring you. Yeah. So let's dive on in. It's 10 o'clock. My first question, I see that you promote QuickBooks. Do you have an opinion of FreshBooks? I currently use Wave and feel like it's time to upgrade. I provide copywriting and marketing services, so no actual products to sell. I feel like the options FreshBooks provides at a lower tier, such as a customer portal, the interface looks a little easier to manage as well. Would love your insight. So really, my honest opinion is use the software that's going to work for you, that you're comfortable with, that you feel fits your business. I promote QuickBooks. It is the most common, especially in the United States. So it has a lot of apps and things that you can integrate it, and it works with really well. And I think that's one of the reasons why it's promoted so much. I am not the largest fan of FreshBooks. I find it actually difficult to use. I'm not even sure what you're talking about as far as like customer portal. I don't have a ton of clients on there, so I'm not that familiar with FreshBooks, but I also don't find it very customizable. So when you want to add categories that it's not showing and things like that, it's not the easiest to work with. I do like Wave, so I'm curious of why you might feel like it's time to upgrade. I think Wave is a great option. You can add categories, reporting is great there. And if you have a service-based business, I don't see a problem using Wave. But yeah, so it's a really personal decision. How's that? We'll leave it up to you to decide. I don't think there's necessarily one wrong or right. If you find it easier to use FreshBooks, then by all means use FreshBooks. Again, I don't know why you would be switching away from Wave if there's something there that's missing. So if you had maybe more specific things to share there, I'm happy to kind of dive in a little more on that. So this one is from a digital nomad. I'm a UK-based resident who travels as a digital nomad for many years. I pay taxes to the UK, but of course I'm looking for ways to reduce or eliminate them, as I'm not in the country most of the time. I'll be happy to stay in various countries for less than 90 days if I can avoid paying taxes to them. UK system usually wants to know where we pay our taxes and what's the new address for residents, if not the UK. So my quick answer to this is really, I support US taxpayers. I am not familiar with tax laws and tax rules outside of the US, so the UK being one of them. I know this person is also talking about being a Dubai resident because there is no tax there. And I really don't know enough to advise on this. Yeah, so I wouldn't feel comfortable doing that. When US taxpayers always have a tax obligation to file in the US, that does not change. And yeah, so I honestly can't answer that. That's beyond my scope and of knowledge. So I wish you the best of luck. And I love digital nomads, but I really only know US tax law. I think regardless of, you're going to have to pay taxes to some country. That's just my kind of assumption, whether that's the UK or whether that's Spain or something, depending on where you're spending time in. But again, out of my knowledge base. So yeah, let's see. Why do I have to pay taxes on alimony income? So this specific person was reaching out because divorce happened prior to 2018, and that means that when they receive the money, and they have to report it as income, and it's taxed on their tax return. The person who is paying it out gets that deduction for that money, and so they pay less taxes. And in 2019, this changed. So therefore, the person who is the paying it out were like originally receiving that income, right, from the wherever, they're paying taxes on that money, and the person who's receiving it is not. And this was just a tax law change, and it just went from 2019 divorces, with paying alimony. That was the change. I don't know why they decided to do it that way, but that's just what happened, and I can't really speak for why. And there's no rhyme or reason sometimes for why they make these rules the way they make them. But yeah, so if you got alimony from 2019 to the present day, to 2023 at this time, you don't pay taxes on it if you're receiving the alimony. Make sure you do know the person who's paying it, their name and their social security number and the date of the divorce, because it will ask that on the tax return to know, right, which treatment it is. And that's why it asks that information. So I've got one more question. If you are here live, feel free to drop a comment in here. I definitely can stay a little longer. I will keep this short if there aren't any more questions. As you can see, these questions can vary. So we can talk about taxes, we can talk about bookkeeping, anything related to finances, your business, and general life as a digital nomad or an RVer. So I'm a resident of South Dakota and have an offer to work full-time in California. This would be a standard W-2 type employment. I have the option of using a South Dakota or California address for my proposed employer. What are the most beneficial options for me financially? And will working in California, possibly paying taxes there, affect my South Dakota residency? So to unload on this question, I am not clear when you say I am a resident of South Dakota, I have an offer to work full-time in California. If you are working in California, like physically there working, spending time there, you are a California resident and will pay California taxes, especially if you're going to be there full-time. So you would have to switch your residency from South Dakota to California if that's where you're going to be living and working. I'm not sure if that's really clear here. If they were working remotely, then I don't see a problem keeping your South Dakota residency and using a South Dakota address. But that is, yeah, it's unclear to me with what's written in the question. So if you're here live, feel free to leave a little bit more information, because that is not clear to me. But just to clarify, if you are physically going to a job, a W-2 Monday through Friday, 9 to 5 job. Okay, it doesn't have to be Monday through Friday, 9 to 5. I do work with some travel nurses and things, and I'm sure, they don't work your traditional hours. But regardless, if you are going to work physically in a state and spending time there, you need to be paying California taxes and most likely California, possibly be a California resident at that point, depending on where you're actually living and spending time. So that's really the definition is, are you living there? Are you spending time there? Is that where your work is? Is that where your home is? Yeah. So it could definitely impact your South Dakota residency, because you may actually become a California resident at that point. So if you have more questions on that, feel free to reach out for clarification or anything as well. But anyone here live, feel free to drop a question in there. And if not, I am going to call it a day, because I don't have a ton more questions. I did see someone here. I'm sure this has been addressed so many times. Is it possible to claim a portion of your van that I live in as an office as a digital nomad? So my blanket answer there is usually no. A home office needs to be dedicated space for business or business, right? Really business. If you work for as a W-2, there's no claiming anything. There's no home office deduction for you. But in a tiny space, especially a van, There is no dedicated space to a business. That's just, it's not possible. And it honestly would be so tiny that it would not be worth raising a red flag. So home office and mileage are both red flags. And I just don't see, you'd maybe save $5. Like, it's just not worth it. So yeah, dedicated office space in a van is difficult. So I would say no. That's kind of the answer. Hope that helps answer that question. And also, W-2 employee never gets to take a home office. So just be aware of that. There's no deduction for that, or, home expenses for having your office in the house, whether that's a mobile home or not, doesn't matter. So I just dropped the link. If you have any more questions, if you're catching this on a replay, and feel free to ask your questions and we will try to get to them in the next Text Tuesday. Let me just pull up a calendar, and the next Text Tuesday is September 5th, would be the first Tuesday of September. And again, 10 a.m. Mountain Time. It's always the same. And I hope to see you then. Again, drop your questions. If you're watching this on the replay, there's the link, and have a great Tuesday and week ahead. And it is August 1st. So happy August, and have a great rest of the summer, right? We're in the final months here, final weeks. So take care.